Hey, everybody, welcome to episode 4, Face of the Community. And today we have Sean Holley with us from Mortgage Equity Partners, which is going
Yeah,
to be a lot of fun because I get a lot of questions about loans and who to go to and what to do. And Sean's going to hopefully answer some of our questions that we get and then some. So, Sean, welcome today.
thank you. Thank you for having me.
Not a problem. So, tell me, how did you get involved in mortgage? Is this like a career you started when you were in college? Like, how did you find your path?
Oddly enough, when I was in college, when I got out, I got into sales and financing in car dealerships. So I was doing that for a while my wife was getting her second degree at Florida State, go Noles. And while she was finishing her second degree, she got recruited by Bank of America. And they said, hey, you can either go to Orlando or Tampa. So I said, well, my dad lives in Orlando, so at least we have a launch pad. So we said, let's go to Orlando. So she started her job, and about 3, 4 months later, I was like, hey, let me get a job at Bank of America. So I started there. I moved into loans pretty quickly and was there doing loans for them for about 3 years before I made the move to a mortgage company that specialized in government lending, which Bank of America obviously is it's a good bank, but they're really looking for A paper, you know. So
Yeah, yeah, definitely. That sounds like a fun journey. And
yeah, and I worked for them for right up to the bust, and I dealt with a lot of builders who built first time home for first time home buyers, which was really great because we could help those folks get into a house easier. We even had some special programs back in those days that would help people with a down payment as well, and we leveraged that all the time, and it was a great program, and we did very well up until obviously 2008 when the bust happened, and unfortunately that company went away. So I bounced around to a couple of smaller shops, ended up at Chase, was at Chase almost 5 years, did very well there. But again, Chase is more of an A paper bank. So with me wanting the need to try to help as many folks as possible, I ended up moving to now Mortgage Equity Partners, and we work with people from a 580 score on up, and we're very competitive on the stronger customers. So we have a wide range of programs. We do some first-time home buyer stuff as well through the state and county, and as you know, but yeah, it's been 20 years now I've been doing loans, which is a long time.
so basically, you've seen everything.
Yeah, I look at it like the Clint Eastwood movie, the good, the bad, and the ugly.
So, before we get a little deeper into the loan side of it, you have a hobby with cars, don't you?
Yes, indeed. I'm a big car nut. I've got several cars. I have 5 currently, and I enjoy it. You see me at the car show, at the racetrack, or hanging out with guys. That's the way that I can, enjoy and do some community events and burn a little steam off.
I don't think I knew you had 5 cars.
Yep, I have 5. Yep, 2 Vets, Monte Carlo, an Audi, and a Z71.
Wow, Z71, what's that, a truck?
Yeah, it's a truck, Chevy truck. Yeah, 4-wheel drive. Yeah, that's my daily driver, pretty much.
Nice. Wow, you got like a different car every day of the week if you want
Pretty much, yeah, yeah.
it. So, therefore, it pays to do loans, I guess.
Yes, it can. Now, granted, I don't have any car notes, so having a car and having a car payment are very, very different.
Yeah. So, and you mentioned earlier, obviously, and I dread to bring this up, but you're a Knowles fan.
Yes, yes, I am. Die hard.
So you went to college there, right?
Correct. I did. I graduated in '95.
So since I have a few segments that are literally focusing on UCF, which is like the greatest team in the state of Florida,
Hey,
um,
we stole your quarterback.
you didn't just steal our quarterback. You also have one of our defensive backs.
Oh yes, yes, that's right. He
Yeah,
should start as well. I'm hoping they both start.
I think they will. In fact, UCF in the UCF stuff, we call FSU's like our satellite campus to the
Yeah, yeah.
north. So, but so what's your prediction? How do you think FSU is going to do this fall?
as long as we're over 500, I'm happy. That's my prediction. So, and I'd like to see Milton start and do well. Not real sure about our defense, but we tend to have some good talent. We just need some strong leadership.
Well, you definitely got that with Milton.
Yeah. Oh, and as a consolation, as you may or may not know, my wife did get her master's at the University of Central Florida. So I'm by default, I'm a UCF guy as well.
I love to hear that. Which I'm sure you probably already know this, but if the college football playoffs end up approving their 12-man team, UCF would have been in the playoffs twice.
And I was pulling for UCF, trust me. Last year, obviously they slipped a couple, rungs there. Definitely better 2-3 years ago.
Yeah, no, definitely last year they did slip. But I think we got the right coach in place now. So
yeah, I think it's hey, and I'm looking forward to a game. My buddy's got season tickets, and it's like a +1, so I'm hoping I can go to one or two, because I've heard from you many a times that the games are awesome and the crowds are awesome, and the pregame is even better.
Well, you should, and there won't be much of a pregame at this one, but you should try to buddy up with him and see if he'll invite you to the first game of the season.
Who's the first game with?
Boise.
Oh, okay. Yeah, that's here, obviously, not on the blue field.
It's a Thursday night game, which is why the pregame won't be as intense.
Gotcha.
But it's Boise, and I guarantee you that house will be packed.
Oh, yeah. And Boise is usually a pretty good team. I think they typically have a winning record. So
pretty good team. And then first game where we got 100% capacity right now.
Yeah.
So it's going to be a packed house. I'm really excited. So
yeah, I'm kind of interested on how that's all going to work out with the whole COVID thing and shots, no shots. Seems like some schools are handling it. Others are just like, well, we'll just go by the honor system. Don't know.
We're going to find out. So.
Are you guys offering any special perks for people at UCF to get vaccinated? Because I know.
And I think we lost him due to weather in his area. So let's see if he'll come back here in a second. It's always tough when we do these recordings. We have challenges with connectivity, and it looks like he might have literally lost out on his, which is kind of hilarious because of the facial expression.
Oh,
are you back?
I'm froze.
Awesome.
A little lag there. We're having a storm here, so that may be messing up my internet. So.
It might, whatever. I'm fine with it. We're going to roll with it.
There you go. Welcome to Florida, right?
Exactly. So let's go ahead and we'll talk a little bit now about lending. So what's the biggest issue that home buyers have when they're trying to get a loan that you've seen over your extensive career?
Definitely being prepared. What I always tell people, since we were talking about sports earlier, I mean, if UCF is going to play Boise, they're going to be practicing. They're going to be running their plays. They're going to be prepared ahead of time. So a lot of customers, they're not prepared for the loan process. Like they have no idea what their credit is. They don't have any savings. They don't have good job time or job stability. So knowing some of this stuff up front, especially for a first-time buyer, is critical. Now, obviously, if you're already established and bought and sold a couple of houses and already know that you have a good track record, or like several people are right now, moving from up north or California, I mean, they're already coming in established. They have money, they have credit. The process is going to be a lot easier for them. The first-time home buyer, it's important to do your homework. And I always recommend, as you always do with your clients, hey, talk to this lender first before you get all into the home buying process to see where you are. The best advice I can give someone is just like a pre-test before a test. Let's look at what your credit looks like. Let's look at what your income looks like, what your debts look like, and then determine what you have to work on. Because you may not be a buyer for right now, but you may be a buyer in 6 months or 12 months. It just depends on your situation.
Yeah, no, definitely. And I always love conversations I've seen you have with plenty of people before. But whole proof of funds, cash on hand type stuff.
Yeah, proof of funds. People are, oh yeah, I got the money. If I had $1 for every time I heard that, I could probably buy another Corvette. It's like saying you got the money and actually showing it and proving it, or having a gift letter from a family member that can support it. Totally different ballgame.
Yeah. So now we'll have a little segment out here specifically for you. We'll call this story time with Sean.
Got plenty of them.
So, what's a story that you might have of like different type of customers, like some of the scenarios that you've encountered, some of the experience that you have that you know to look out for, but not everyone that's out there might not know whether they Google it or not.
Yeah, I mean, you brought up an excellent one with the cash funds. I've seen this happen several times, and sometimes unknowingly people make mistakes with regards to that. As you know, you've probably heard this story once before, where the gentleman was selling something that he owned, or at least he thought he owned it. But, he basically floated a title. He bought a boat from one guy, got the title, got a bill of sale, paid the guy, but then never registered the boat or never had the title put in his name. So even though he sold it to another individual, we went to the county and the state, and they're like, well, you never owned it. Looks like it jumped from one person, skipped you, and went to the other as far as the ownership. Thus, I couldn't use the funds from that. So if you sell something, it's important that you are definitely the owner. And then again, if you sell it, do not use cash. People are always quick to say, oh, just give me cash. Again, this is the Pablo Escobar effect. If you can't source or prove cash. So it's critical that you do get a cashier's check and a bill of sale, and make sure you own what you're purchasing or selling.
Now, with that specific story, they have the cash, but they can't really use it. What's the easiest workaround for a lender?
So again, customers being transparent, upfront, and honest is super huge. For you saying, yeah, I got it, and then I asked for a statement, and you're like, hey, I got $10,000. I'm like, I don't see it. Don't worry, I got it. That's red flag. Don't worry, I got it. Those are red flag words. Oh, it's coming. Red flag words. Oh, I got it under control. Red flag. So if you end up getting a lump of cash and we can't source it, typically in most situations, you need to leave it in the account for 2 statement cycles. And then you don't fall under any money laundering or some of the other federal guidelines like Patriot Act for sourcing and seasoning funds. So if the funds sit in your savings account, even though we couldn't source them then, for 2 statement cycles, they're not going to ask, and then you're okay.
Awesome. So many people in the real world do not understand how to make your credit better.
Correct.
Yeah. Do you have any tips of what they can do to improve their credit?
Oh, there's so many. But generally speaking, I know a lot of people rely on some of the third-party free credit monitoring services. Just realize, since we're on the sports tip, as we like to do, some of those free monitoring systems are equivalent to high school football, and we're in the NFL now. So yeah, it may give you some information, but it's not giving you all the information. It's not giving it to you accurately. So with regards to credit monitoring, obviously, when you go to a lender or professional to get your credit pulled, they're going to be pulling a tri-merge FICO score. Customers can get that, but they have to pay for it. Usually you have to go like to Equifax, Experian, and TransUnion. You'll pay $25, $30 to get it, or you can go to someone like me, a mortgage professional like me. I'll send you a free copy of your report and the score so you can see where you stand. Because if you rely on some of these third-party, i.e. Credit Karmas of the world, Credit Sesames of the world, you're only going to get part of the information, and that information is not accurate for a mortgage transaction. But generally speaking, the best things that people can do, obviously, when it comes to credit, besides talk to a mortgage professional like myself, is do your research, do your homework. There's a lot of falsehoods out there, and unfortunately, people's parents or elders sometimes spew falsehoods about credit and what's needed. For example, people say credit cards are the devil. A credit card is a great tool. A credit card makes up 1/3 of your credit. Obviously, if you're not using it properly or missing payments or have a maxed out or high balance, it's hurting your score. But if you're using it properly, it's definitely going to benefit you. Not having a credit card actually hurts your credit score, which a lot of people don't realize that. So you should always have at least one, I recommend two revolving pieces of credit. But obviously, if you have a credit card, I would not ever go over 50% of the limit. So if it's $1,000 limit, I would never charge over $500. I would make sure it's below that. Ideally, you want to stay at 1/3 or less to have like an A as far as how you manage that credit card. And then obvious things, pay your bills on time, super obvious, but unfortunately people don't do that. Installment loans are great, but it's, if you have a lot of big installment loans, i.e. I got a motorcycle, I got a boat, I got an ATV. I mean, those are all fixed payments. That's eating into your mortgage. And those don't help you build credit or get you a score. They assume you're going to make those payments on whatever, the 1st or 15th of every month, and you're going to do it diligently until you pay it off. And once it's paid off, they say, hey, good job. But up until then, it's not doing anything for you. Whereas a credit card is giving you an update monthly on how you use it. So that way it can affect your score in big swings up or down, depending on how you use that credit card. So credit cards are important. The other huge thing that people screw up on too is student loans. Just because your student loan is deferred or you don't have a payment right now doesn't mean you won't have one in the future. The federal government changed those rules several years ago because so many people had huge numbers of student loans, and because it was deferred or zero payment, they'd say, okay, you're good. Now you can buy a house. They'd buy a house and then the student loans would kick in and they wouldn't pay for the house or wouldn't pay for the student loan or both. So obviously the government was losing on both of those. So the new rules came out. So if someone tells you, oh, it doesn't matter if you have a bunch of student loans, that is incorrect. It doesn't.
Good old student loans.
Yeah, it can make or break a lot of folks, unfortunately. But there are workarounds. Obviously, if you're a good credit, a good steward of your credit, so to speak, like someone that maybe is in the 700s, you can always look at income-based payments, and you can qualify for the income-based student loan program, which instead of taking 1% of the balance, which is the normal requirement on student loans, based on your income or how many dependents you have, they may allow you to take a lot lower payment, and we can use that to qualify. But again, that's not a program that's designed for people with marginal or low credit scores. So you'd have to work your way up in order to get that program, take advantage of that program, thus help you buy more house.
Awesome. Well, before we end for today, is there anything else you'd like to share with our audience?
Yeah, I mean, it's 2021, and I'd have to say I've done lots of pre-approvals, but this is an extremely challenging market right now. It's very difficult for folks to get contracts here. And not to be a bearer of bad news, but there's a lot more experienced buyers coming from up north that have down payments, better credit, ability to buy more, or ability to pay cash for a house. It makes it real challenging for folks coming into this market to get their first home. And it can be a little frustrating. So you definitely have to be patient and realize that you may have to go through this process several times as far as trying to get a contract, even though you got an approval, just to get that contract. It's been very difficult. And the other thing I want to throw out there, we're seeing more of, is the appraisals now are tending to come in a little bit short because so many people are paying over, or asking way over normal prices. And don't be afraid to try to go under contract as long as you don't have an appraisal contingency, because remember, the bank's on your side. We don't want you to overpay for something. We don't want you to have a crappy house. We want you to have a good house at a good value. Now, if you determine that you want to pay over for something, that's totally up to you, but you better have the funds to do it. And be aware, you and your realtor really need to talk that out, because I've seen it work out for some people and not work out for others, and then some people get mad about it. And in reality, we have no control over the appraisals as lenders. It's a third-party event that goes on as far as the value, and those guys are licensed professionals. They're going out there and they're looking at everything to determine if this house is a good buy or not.
Yeah, no, definitely. Well, thank you so much for today, Sean. I appreciate it.
Yeah, my pleasure.
Thank you for everyone jumping in to check out today's episode. Sean Holley from Mortgage Equity Partners. A lot of great information was dropped today, and I hope that's helpful for you. I'll see you guys next week on next week's episode.
Thank you very much. Take care.